Well, hi everyone, welcome to the Buffett and Beyond Research Saturday ETF Report, April 25th, 2026. And remember folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let us look at the QQQs, and this is the NASDAQ 100, of course. And you can see that we were worried about this entire line in here. And I want to draw it was at the 600 level because we were holding that level pretty well throughout a good part of the last 4 or 5 months. And it would go up, it would come back down, and then all of a sudden in here it dropped below it, scared everybody, and then all of a sudden took off like a rocket. Now here were the original tops that we had on the QQQs, and that was right around the 635 level, and now we're up almost 30 points from that, sitting at 659 as I'm recording this on Friday afternoon. And you can see that this indicator up here is starting to slow down a little bit, but we were pinned right at the top in there, and we've come down a little bit, but everything is strong. We have the 20-day moving average moving above the 600-day moving average, moving above the 50-day moving average. So these moving averages are in the order that they're supposed to be, and I use that term loosely, supposed to be, but it looks good. And when we get this run like we've had here, and we're going to show you the amount in a few minutes here, but when we get a run like we have had, one of the analysts came out and he said he did all sorts of time periods, and when you've had a run like this, 3 months later, 6 months later, 9 months later, the indexes are higher than they were original when they came off of that bounce. So we're looking for upward market movement. We're looking at a Federal Reserve that is our friend. In other words, they're not tightening rates. And of course, we have Congress that spends all kinds of money no matter who's in power, and that always helps the economy. That brings on inflation, but it helps the economy. Let us look at the year-to-date. The QQQs are up 7.5%, as you can see up here. And this indicator, which is our stochastic indicator, is topped out, sticking right at the top there. And then all the way down here, our intermediate-term indicator is still moving up. So we're looking good in here, and yeah, the market has had quite a run in here, as we're going to see in a moment, and well, we like it. There's nothing not to like about it. And here are the ETFs year to date, and look what is at the top at 47% is semiconductors. And up until last week, the oil and gas and the energy were leading everything, but all of a sudden the semiconductors have come into their own, and they are rocking and rolling up here, followed by oil and gas, followed by energy. And then we come all the way down here, and we want to look at the home builders, because the home builders are actually positive for the year. And even though they have kind of been in a slump for the past year and a half, we like this area, and we talk about it a lot, and we're going to show you our top picks in this ETF, which are doing very, very well. But we're thinking that with lower interest rates, if they ever come about, lower interest rates would help the home builders. And because they have been in a slump, and we're talking about inventories, and you hear all sorts of news on them, but the home builders and home construction, you can see them side by side in here. And our portfolio is a combination of home construction and home builders, because these stocks can overlap quite a bit. You're in home construction. If you're a home builder, you're also in home construction. And what they look at in home construction is, okay, you might put all your energy, or your whole business is in installing new kitchens, installing new bathrooms, insulation, air conditioning, heating, ventilation, and air conditioning. But some of those people also build homes and apply the construction part of it. So these do kind of overlap. So we made one portfolio out of it. You can see that we're doing really well in that in a second. Now the S&P is up 4.21%. for the year. And when you look at areas like the semiconductors and technology, which we're always in, we can see that we're doing a lot better than the market averages. And our growth portfolio is doing very, very well, almost double, well, more than doubling the S&P as of yesterday. And we'll take a look at that in our Saturday market recap. So that'll be fun. Anyway, all the way down here is healthcare. And even though United Health did very well this past week, surprised everybody, healthcare we just don't like, because we don't understand what's going on in the healthcare business, between who controls prices for medicine, and I go to different pharmacies and everybody charges something different. And so I don't care for what's going on because I don't understand it. If I took time to understand it, might do better at it, but it's still down 6.46%. And why even worry about that when you do have home construction, which is, I think, going to do better in the future. And of course, we have our technology, we have our semiconductors, and then we have our whole growth portfolio, which are in stocks that we hear about every day that are staples for us. And we'll get into that in another video. And let us look at this past week. Look at, I can't even believe this. The semiconductor ETF is up 14% this week. Absolutely unbelievable. And we're in earnings season here, folks, and the semiconductors are coming out with some pretty good numbers, as you can see by this week's move of 14%. Now, this is Thursday to Thursday, so I actually did this Friday right about midday, where I got this chart from. So we're looking at from the late last week up until late this week. But that is just an unbelievable move. And of course, oil and gas are all over the place because of what's going on in the Middle East. And again, healthcare down here, negative 3% for the week. And the S&P in here, the SPX, S&P is up barely moved this whole week, while the QQQs gained 1.63%. And look at these semiconductors in here. And of course, some of the semiconductor stocks are in the NASDAQ 100. And let's look at United Health, because I just want to show something to you. I was talking to a technical analyst, and he said, wow, what a jump in United Health. I said, but did you catch it? And we went over the charts, and we like to buy something, and we're not traders, we're not technical analysts, but when we see a trend up like this, had come down and then was starting to move up, if we follow this line up, we can see that on the day after the close, when we finished the day and we saw that we got the move up here, it was a buying situation for you traders. Well, the next morning when you went to buy, it already had gapped up to the 200-day moving average. And again, we're talking about United Health, which is in the healthcare services. It had already jumped up, so it was very, very hard to catch this move. My trader friend did not catch it, and he says, well, it's at the 200-day moving average, and it'll test that, and we'll see what happens. Well, you see what happens. It started pulling away, and bam, it jumped up again. So the problem is with the technical analysts, they look at this gap here and this gap here, and you know the rules, that gaps are filled sooner or later. And maybe they're saying, or they are saying, that it's filling this gap on the way down, so it's filling that gap on the way up. But on the way up, it had gaps. So who knows? We just talk to the technical analysts because they're fun to talk to. And let us look at the healthcare. And you notice that we haven't talked much about healthcare this year because we're not in any of these stocks, except we are in Eli Lilly and we're in AbbVie, and those are in our dividend growth and income portfolio, and they're down for the year. So this is something that we look at, and even though we like those stocks, and they've been very, very good to us, especially last year, but right now they're down with that whole healthcare sector. And the stocks that we picked, even though we're not in any of them except the two that I just mentioned as a portfolio, we just don't care for healthcare because we understand that about as much as we do as semiconductors, which we don't understand either, except when you look at a company that has had a long history of nice movements up, increasing earnings each year, increasing dividends each year, then you know you have a pretty good company like AbbVie and Eli Lilly. But right now they are not doing so well because the whole sector, and so our top stocks are down 10%, while the sector itself right here is down 6.7%. So it's just not doing well in that area, and we're glad we're not in too many of these stocks at all. And we'll wait for these stocks to come back because they are good healthcare companies. Now, let us look at the semiconductors, and here is the semiconductor index, and you can see even today, as I set up these charts, this is up almost another 1%, or at least a 0.5% more than it was in the two charts previous. So that's how fast this semiconductor area is moving, especially this week with the QQQs, the NASDAQ 100, doing so well. So our portfolio, First Solar there is, we questioned about putting that in there because they do have government tax breaks and things like that. We don't like to get into companies that have tax breaks when you're in a situation where we have a drill baby drill type of policy. So First Solar, we were very reluctant to put that in, but we did put it in because the numbers look good on it. And we're up 37%, while the and I'm talking about our top stocks, they're up 37%, while the index itself, the XSD ETF, is up 48%. But wait, if the S&P is up only 4% and you've got a 37% increase here, you're not crying at all. And let us look at the techs, and the tech is up 10.92%, but the stocks that we select, the top stocks out of that, are up almost double that. So we're doing very, very well in this area. We're doing very, very well in the housing area. And let us look at the housing area. And here we are right here, and these are the stocks that we like. Now, the housing is up 6.33%. Our portfolio picks are up 16.5%. So it's another area where we are outperforming the index, because if you pick the, let's use average, if you pick the above average stocks in an ETF, you should outperform the entire ETF, because the ETF has above average stocks and it has below average stocks in it. So we try to pick the above average stocks, and pretty much all the time, almost all the time, we outperform the ETF itself. And you know that I love to show this because this is over the past 7 years. Here's technology up there. Had you bought the S&P 500, you'd be up 173% over 7 years, which is not bad. And the XLK, if you just bought that ETF, you'd be up 367%, more than double the S&P. But if you picked our top stocks, you would be up 919%. And notice in here I've highlighted 2022, which was a tough year for the market itself, and you can see that the portfolio and the XLK itself is more volatile than the S&P 500. But don't forget, the NASDAQ during this time was down 34%. So the S&P did relatively well to the NASDAQ, and our top stocks and the technology ETF were better than the overall NASDAQ index. But you can see when these stocks come alive, they are just rocking and rolling. And now with the semiconductor down here, we have the same situation. The market up 173%. The XSD up a little bit more than the technology at 394%. This is compounded now. and our model portfolio up almost 1,000% over the past 7 years. But you've got to understand you have more volatility in a portfolio that outperforms. It's that simple. So you have to be able to weather something like this. But what are most of you doing that are subscribing to our newsletter? Yeah, you take some of these stocks and you put it in with your 30 stock portfolio, or you take the 30 stock portfolio, keep the ones that you feel are going to do good, because they're all good stocks. The key is, are they going to do good in this 1 year before you rebalance and maybe replace some stocks? We only rebalance once a year, and very seldom do we change the stock during the middle of the year. Every now and then we do, but not for the most part. We change at the end of the year or the very beginning of the following year, depending on your tax situation. And then you get into, or we change some stocks out, usually 5 or 6 stocks a year out of 30 some stocks, and then we rebalance. And that's one of the things that Buffett has been talking about, especially as you are going toward retirement or starting to set up your portfolio, so that when you do retire, you have enough income from your dividend growth and income portfolio, enough income in dividends to support your Social Security and your pension that you get. And most of you are working after you turn 60 or 62, working at least a part-time job. So you've got to figure out that you want enough income to be coming in so that you can take a part-time job after you retire. And a lot of you are retiring earlier than in past years, but you're working longer because you're not staying at the same job, or you're working part-time at that same job. So the key is to start setting up your portfolio, which have been going over in our daily letter. And you want a growth portfolio because you turn 60, you turn 65, odds are that you're going to live into your 90s. So you better prepare for another 30 years of inflation eroding at your cash. That's why you have to be in some growth stocks. And then we have the growth portfolio, then we have the dividend growth and income portfolio. And then Buffett wants you to have a portfolio of treasuries no longer than 3 years, because they can be volatile as interest rate change. But if you are in short-term treasuries, then that gives you enough money to go through any type of period where the market goes down and takes another 2 to 3 years to come back, because you don't want to have to sell your growth stocks when the economy is bad, because you're selling at the bottom and buying at the top if you do ever get back into the market. And the idea is to sell near the top and buy back at the bottom. And that's why he talks about rebalancing. But we'll talk more about that in our daily newsletter. So folks, we had another good week in the market. Oh my gosh, that semiconductor area is just blowing everybody away. So it's the weekend. Go out, be with your loved ones, take your mind off the market. Most of all, stay safe, be well, and we'll see you back here in a couple of days.